Today, we'll be breaking down the CPI news, some of the impact on the crypto market, and also take a look at some of the intriguing elements that are happening around stablecoins. You guys don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. Thanks for coming in on the live stream today. If you're brand new to our show, first thing I ask you to do is make sure and just subscribe. Just do that. You've spent the time to maybe go out and search a few crypto videos, and now you're starting your journey. Subscribe. We'll get into your algorithm. Hopefully things are going to perk up for you guys in the crypto market. I want to thank our sponsor, and that is iTrust Capital. Going long-term in crypto is done in an IRA. And the way you can do that, matter of fact, you can still get in before the April 15th deadline for the tax deadline of being able to get a crypto IRA started, or any IRA, but you can get a crypto IRA started, get Bitcoin, Ethereum, all that. No fees, just a fee on the transaction that you're doing inside, which is self-directed, by the way. And all you have to do is use our link down below and get you a $100 funding reward. A couple of news items that we'll, of course, get to. The first one up here is CPI inflation is now at 3.5, which is much higher in many basic necessities. If you look at car insurance, much higher. Transportation, much higher. Car repair, hospital services, electricity, rent. You can kind of see it. Food away from home inflation. Basically restaurant industry, 4.2. But both core CPI and headline CPI came in hotter than expectations. This is probably the biggest news right now. Many people, I think, would look at this and say, well, this is bad for crypto. In reality, this is bad for bond market. This is bad for possibly the dollar in the fact that we've got continued devaluation occurring. Could be good for risk markets. And I think we'll paint that out today and what maybe is going to be going forward. Other things right now that are playing into this is going to be the political landscape. You've got President Biden saying today's rising inflation report may delay interest rate cuts, meaning don't get comfy. Cuts are not coming. And that's the big news. I think that's the one that we have to look at, which means that dividend interest and yields on money markets, etc., are going to be continue, I should say, higher for longer. And this is kind of the old theme going forward. It's a very interesting position, though, right now. I think with the Fed, they're kind of in between a rock and a hard place of where this might go. And that's the problem of whether or not we actually see a interest rate cut, because that itself could be a scenario when we're trying to reach this 2% level. I want to go to a clip here of Chair Powell talking about that very issue. Listen in.
Our old friend at Harvard, he says, overall, it's a mystery to me why anyone thinks the Fed might cut rates in June. The labor market data is screaming a cut isn't needed for one side of the mandate, and the price data is screaming that it could be dangerous for the other side of the mandate. Are you in agreement or disagreement with Mr. Furman?
Well, I wouldn't use this screaming so strong in that regard. But that clearly the Fed has made a commitment to keep inflation low and get it back to its 2% level. And I think that's absolutely the right thing for them to do. And the path was looking pretty good for a while because inflation was coming down. There was actually some progress on tightness in the labor market. It's not seen in the unemployment rate, but when you look at vacancies relative to unemployment, which is a measure that seems to work a lot better in recent years, they made a lot of progress. But the problem is now that the economy has been very strong, and basically the decline in inflation is stalling. Now, also, most of the decline in inflation was from the removal of the supply shocks and supply chain problems. But
so, Rick,
sorry about that. I had that out of line in my clip list, but of course that's CNBC. And the point being is that they're staying the course here for a 2% scenario in terms of inflation. There are some indicators, though, that have already kind of looked at inflation in general. I'll show you that in a minute. That maybe says we're already there. And if you look at just 12-month percentage change, this is the consumer price index on selected categories, all items, right there's food. But the point is that in reality, it is a good thing, because if you go back here to say, let's take a look right here at 9.1% inflation, and that was in June of 22. And then we've continuously seen a downward trend. A little bit of sideways action basically is what we're dealing with right now. So some people would look at this and not necessarily say this is terrible for the market, but it is the optics. I think that's the bigger thing. Many people will make a lot out of this. The reality is, I think this is a shift right now of continued pressure on the dollar people will continue to move over to the ETFs, over to Bitcoin, over to Ethereum, digital assets in general, all that definitely going in that direction. Here's Truflation, just to give an example, already coming in sub 2 if you look at what they're looking at on a year over year or year on year change. And this is available, regularly, and you can kind of see the comparison right there versus where the U.S. government reported at 3.2. So I don't know, which one do you believe? And also some coming in hotter, much higher. Many people, I think, would expect that. But there has been some pressure on small business, and that is another factor I think that will continue to push on inflation in general, meaning that's going to reduce it somewhat. Also breaking is the 10-year note yield, which is officially back above 4.5%, first time since November. Markets have priced out another rate cut, showing 2 cuts in 24. And I would love to get your opinion. Do you think we're going to get a rate cut or not? And with the kind of scenario that plays out in the summer, typically, does a rate cut set up for later in the year? I think that is going to be something we're watching. Once again, calls for a Fed pivot. We're premature. Again, the fight against inflation is still far from over. So big deal right here. Higher for longer is back. That's one we've been talking about for sure. SEC to file lawsuit against Uniswap. This is another issue right now that's hitting on crypto. And of course, this is issuing a Wells notice. I think this, of course, is the SEC grasping for straws anytime they can to try to slow down DeFi in general. That's just in general news overall. The other thing you have to look at is Bitcoin and Ethereum and whether or not it can hold. And really, if you look at U.S. inflation, still holding at 3.5, but at this time, we're already seeing Bitcoin starting to crack into around 69K again. I'll go to the charts here in a minute. We'll take a look at that and give you guys some ideas. By the way, if you have a token, maybe we're interested, we might get to charting that toward the end. So let us know, drop in some notes down below. And we'll get to that. Bitcoin price slipped below 68, ETH threatening to go lower around 34. I don't think we're going to see too much of that right now unless we see some more pressure. As long as the inflation remains high, it's unlikely the U.S. Fed will lower interest rates. Most likely everybody's on that boat right now. Further into this, analysts say Bitcoin having influence is no longer driving the price. And there's some reasons behind this. Let me kind of zoom in on this for you guys. Influence on halving event has been dwindling over time. Price of the cryptocurrency and potential bullish rally being driven by a new change in market dynamics. I think everybody knows what that is. Demand from long-term, large scale has now become one of the primary factors pushing the price of Bitcoin upward. We'll continue to see that, I believe. And also an 11% month-on-month increase in large-scale Bitcoin investors. That's the biggest one, holding between 1,000 and 10,000 Bitcoin, so reaching unprecedented levels. This is where the movements are. So we are going to see that kind of waffling scenario until we see large walls of cash coming in. And that's the thing we've talked about often is the liquidity events that continue to push into this. So still, everybody's remaining a little bit more optimistic about the influence in general. But overall, the real numbers are coming in from, of course, the big whales. I don't believe this move is fading the higher than expected CPI, whether the Fed cut rate hits 25 bips in June or not, isn't really the long-term driver of Bitcoin right now. It's a marginal factor. ETF flows, rising deficits. That's really kind of lining up in terms of the pressure on the dollar and the fact that now people have the direct exposure capacity to go into Bitcoin ETFs. But it also gets into how does this play for the average investor that's saying, do I get direct exposure? Do I continue to go into the risk markets? We've talked about that quite a bit here on the show recently. And I think this may continue to be a trend that we're going to see, which is why I think ETH and many of the digital assets we talk about will continue to move. Again, don't forget to drop in some questions over on the side. We'll try to get to some of those. And we definitely have a poll up there today, so take a look at that. This is the CEO of Cross Border Capital talking about crypto versus inflation. Listen in.
Basically, what's going on here is that global liquidity is going up, financial assets are going up, but they're more or less sort of treading water together. And there's actually, if you look at the chart close enough, there may even be a slight decline saying that financial assets are not actually matching the rise in global liquidity. Now, global liquidity expansion is monetary inflation in my terms, and therefore what you need are dedicated monetary inflation hedges. And those dedicated monetary inflation hedges are gold, and we suspect, and I use the word suspect, cryptocurrencies. We don't know because the timeline or the history is too short, but certainly that's how they behave. Bitcoin behaves like exponential gold. And if you look at the multiplier or the loading, every 10% rise in global liquidity leads to about a 12 to 15% increase in gold. The loading for Bitcoin on average in its history has been 5 times. So it's 5 times the loading of gold. Now that will likely come down, but you get my point. It's highly sensitive to liquidity, because if I'm correct, and there's all this money printing out there, these are the great hedges to own.
All right, so great hedges to own, active markets. To his point, I'm looking at the gold chart. Now, the reason I'm looking at the gold chart is because it continues to move up, and it's been holding. Of course, we had a little bit of a reversal, but back down to 2,300. But the point is that Bitcoin, digital assets, ETH, meme tokens, you name it, anything that's going to be in that space for the potential of liquidity and also the activity in the markets playing right here. We're in the right market to be in for sure. I want to go to another tweet right here. This is Eric Balchunas. I'll zoom in on that. Nice look at where all the trading is happening for spot Bitcoin ETFs. Off exchange is huge. That's a big deal that we were just talking about. But you can kind of see there's Fidelity coming in 19. IBIT still controlling the ball. And then, of course, GBTC at 31 overall in trading market share. So good news. I think this is still a positive point of the ETF still pushing the market, still moving people out of the dollar into alternative assets, especially risk assets going forward. So it's still a push for a somewhat bullish position right here. Hong Kong is also set to approve the first spot Bitcoin ETF in April. This, I think, will also push it. Remember, we have the halving coming up right here, just around the corner. Also, a Hong Kong ETF coming in as well, which will open up more global liquidity overall. I want to get into another clip here real quick, and this is Van Eck talking about stablecoins and whether or not, we've talked about this a little bit before, but this has some bearing as to how the market is going to gain liquidity. Listen to it.
I love a family working together, and your son launched a stable coin recently, a US dollar backed stable coin called Agora. Did you have much involvement, or were you advising him when he was building this?
Oh no, you know how it goes. I think we discovered Bitcoin together, but I'll give him credit for discovering it first. I do agree the stablecoin market is very interesting. You know, there's about 200 billion in stablecoins, but 10 trillion in annual transaction volume, and it's dominated by 2 players. And I agree that there's a lot more competition opportunities in the stablecoin space. And what we're going to be doing for Agora is what BlackRock does for Circle, which is manage the reserves. And you need, I think, a regulated entity. Listen, I think they need to have wide adoption, right? So that's really the test for, let's say, a centralized exchange in the US. I'll leave the names out, or a big fintech with millions of users. It's okay, but they need to get that volume of usage. You know, Circle about a year ago during the financial turmoil around Silicon Valley Bank traded down to 93 cents. So, you know, as an ETF sponsor, that's not something you want to see.
All right, so as you can see, there's a lot of activity on the stablecoin side. And remember, we touched on this earlier in the week. Ripple was launching their US dollar stablecoin, taking on a $150 billion market dominated obviously by Tether and Circle. But there's going to be other players out there, including the likelihood of things like BIDL and other assets that will start to peg against the US dollar even more so, but from a digital component. And if you think about this, XRP, just that news alone could be one of the potential synergies here of how XRP is flipping USDC more than just a short-term trend. I don't know. This is where we'll continue to see a little bit of activity, I think, around this. And if you look at USDC, let's go over to CoinMarketCap real quick. And I want to show something here. So this is a normal trend, that we saw in USDC. Remember, USDC depegged at one point. And right there was the high back here in July 22. Moving along sideways. And then, of course, we had the big dip during this bear market. And then the recovery But just here recently, if you go to the 7-day, big difference. So are we seeing maybe a correction here on USDC as a stablecoin with all these other alternatives out there? So still playing into this. We'll try to get some questions. I know we have a poll coming in as well. I want to go to another clip real quick because this is Van Eck also talking about the Ethereum ETF. Listen in.
On the topic of ETFs, I do have to ask you about the Ether ETFs. I know you recently said that it's unlikely that we'll see an approval in May. I know Van Eck has a deadline coming up in May that everyone is talking about. Have you engaged with regulators at all on that, or what's some of the thinking behind that's probably not going to happen?
The basic thing that happens is when the SEC is going to approve a prospectus, and S1, is they start giving you comments on it. So the Bitcoin ETFs really started moving in my mind when they called us and said, "Oh, here are our comments." Well, we filed, as SIBO's filed for 19 before approval. We filed our S1, and we haven't heard anything. So that's kind of a sign. You know, with ETH, you also have the tax issue around whether staking is going to be possible, whether staking is possible at all, and then what the tax implications of that are if they're available in the legal structure of an ETF. Well, it's like a 33 Act ETF.
But are you looking at any other crypto assets for an ETF in the near future?
Not in the U.S.
Not in the U.S. Okay. So remember that with Circle, there was a time in which Circle was paying yields. That went away quickly, obviously, for the regulatory scenario, which is part of that run-up, and then, of course, some of the fall-off, because that was liquidity coming out of that. So the point is, I think we're going to still see some very interesting plays in this area going forward, for sure. All right, let's go over to the poll real quick. Take a look at what you guys think in terms of rates. What do you think? All right, will there be interest rate cuts this year? Oh, wow, everybody's still coming in at 65. I'm going to have to do the straw man side and go 35% on that one with the no. I don't think we're going to rate cut, at least at present. I mean, granted, it's kind of waffling. The minute that the Fed gets a whiff of a lower CPI number, which could come through the summer, that could be the reason. Because remember, they need this. I say they. I think the U.S. will need this, especially from a political landscape, to be able to jettison into an election with falling, inflation. That would be the narrative going forward, because really that's what it is. It's the narrative going forward. All right, a couple questions. Raul says ETH gas fees are ridiculous. Man, there's no doubt about it. Sapien says crypto is dead, gone. LOL. Did he land on the wrong channel? He must be. He's a gamer. Yeah, must be. XRP is dead. Everything's dead today. What's going on? Solana is congested. Dogs and cats living together. Mass hysteria in the streets. What show or what movie is that from? Everybody knows that, right? Today is a great buying day. Yeah. Mean reversal on trading. Strong dollar means cheaper imports. Yes, that's a good one. Would agree. U.S. inflation going up. Bitcoin inflation still holding. Because remember, Bitcoin is going to continue to do, just like Ethereum and some of the digital assets you may hold, whether it's Avalanche or Solana, Flow. You could go across the gambit, I think, with a lot of these. DPay for lunch. Yeah, man, that's one of our projects that we love a lot. Inflation report crashed crypto. I don't know if it crashed anything, really. I thought it was kind of a lull day. Sure, you see a little bit of red but that's kind of every other day in crypto in general. So I don't think so. Memes are definitely holding up for sure. ADA versus Link versus Matic. Well, that's an interesting question. ADA versus, because they're all so different. But for me, I would say, yeah, Chainlink. Yeah, I'd go that if I was investing in one of those. I'm not financial advice. Yeah, thank you, Flying Tiger. We got Ghostbusters. But which one? The Cursive was number one. Yeah, right. All right. Uni did slip a little bit. Yeah, down a little bit. I don't know if it was how much down on it. Let me see if I can pull that chart real quick, and we'll get to it. Let me flip over to Uniswap, and we'll take a look at that real quick. Just take a quick look at Bitcoin right now, holding at 69.7. Not bad too. I think, a little bit of an uptrend right now on this indicator that we're holding in. So not bad. Like it. 3,500 on ETH. This might be a reversal on ETH. This could be good too. So a lot happening. Let's see. Uniswap, I think everybody was wanting to take a look at it. Back already, let's see, where are we? Right at $10. It had slipped under $10. That might be a good buy point. Remember, a lot of liquidity right there after that big news on Uniswap not too long ago. So good stuff out there. All right, if you guys like these live streams, make sure and let us know. Smash the like button before you exit. And if you're not in our Diamond Circle, get in. It's another great place to get additional content, or catch me on X at Paul Barron. We'll catch you next time right here on TechPath.